cost of goods sold, cost of revenue, cost of products, cost of services, cost of sales. Are these financial terms the same or different? Two of them are umbrella terms, unifying labels for related concepts. Cost of revenue and cost of sales are at the head of the hierarchy, so to speak. Let's illustrate that with real-world examples from the financial reporting of two of the largest companies in the world, Apple and Microsoft. Apple uses the terms sales and cost of sales. Microsoft uses revenue and cost of revenue. Below that top level of either cost of sales or cost of revenue are cost of products and cost of services. Let's get some of the linguistic confusion out of the way. Cost of sales does not equal the cost of the sales department. And cost of revenue does not equal the marketing cost to generate revenue. A definition for both cost of sales as well as cost of revenue in the world of financial reporting. The costs incurred to produce the sales or revenue generated. The verb to produce is used in the broadest sense of the word. If you manufacture boxes, then cost of products consists of materials, labor, and machine hours. If you provide cleaning services, then the cost of services consists of labor cost and cleaning products consumed in providing the service. In the case of Apple, the products they sell are physical products, iPhones, Macs, iPads, and related devices and accessories. Therefore, it is appropriate to use cost of goods sold instead of cost of products. Having the top level of cost of sales and then the split between cost of products and cost of services is very helpful in margin analysis. If you divide gross margin dollars by sales dollars, you will find that the overall gross margin for Apple is 47%. For products, the gross margin is 37% of product revenue. For services, the gross margin is 75% of service revenue. A classical case of a razor and blades business model, just like printer and toner, or installed base and consumables. In the case of Microsoft, the revenue split shows very few references to physical products. At Microsoft, the word product mostly refers to intangible software products. At Microsoft, the overall gross margin is 69%, much higher than that of Apple. And the difference between gross margin on products and gross margin on services is not that large, 79% versus 66%. So is the gross margin section of the income statement of every company so straightforward and easy to understand? Nope. If a business is diverse and complex, then its revenue and cost of revenue reporting will also be diverse and complex. Let's have a look at Tesla. 1, 2, 3, 4, 5 line items in the revenue section. 1, 2, 3, 4 line items in the cost of revenue section. How does that work? Can there be revenue without cost of revenue? Yes. In the case of Tesla, automotive regulatory credits at 100% gross margin, as there is no cost of revenue related to these.